Big week coming up. A lot of things coming out. Economic reports, earnings reports. Guys, welcome to our new Everything Money 24/7 channel. Please subscribe so you can get weekly updates on things going on in the market as they happen. So Tuesday, CPI, Consumer Price Index come out. Wednesday, PPI, Producer Price Index. What's the difference? CPI is, hey, as a consumer, this is the stuff I bought. How much has it gone up in price? From PPI is, hey, I'm a producer of these goods and services. How much have my costs gone up? So they're very important. Both of them are important. Obviously, CPI can be felt a lot more than the PPI for the consumer initially. But as a producer, if my costs are going up, what's going to happen to my prices that the consumer pays eventually? It'll go up along the way. So remember that. That's how they work together. Keep in mind, 2% is still the core CPI goal for the Fed. Core CPI excludes food and energy because they're highly volatile. But last week, Fed Chairman Powell was speaking and somebody asked, hey, is that really still kind of your goal? He said, it's still our goal, but 2.5%, 3% probably seems more likely, which just makes sense in general because it's a higher number. But the Fed's goal is still price controls here, not purposely price controlling, but keeping costs down. As Fed Chairman Powell accurately said last year, when people were criticizing him for his views on raising rates and possibly having jobs be lost. Listen, inflation affects 100 million families. Unemployment affects less people. His goal was inflation at the time because it was running rampant. Now, my personal belief, Fed Chair Powell has a tough job right now. He gets attacked by everybody, and he still has to keep himself grounded and say what's right for the economy. For those of you who don't know, and I was just born at this time, Paul Volcker was the Fed chairman back in the early 80s when inflation was running like crazy, and he was hated until a few years later when inflation started to come down, and then he was able to lower rates. Now, guys, my personal belief is that the Fed will not see 2% and immediately start cutting rates. Unemployment now is 3.9%, which is big time off its lows, but 5.5%, 6% is considered full employment. Does that mean, remember, we're going through a lot of demographic shifts right now. 5.5%, 6% might be unreasonable in the future. That might be bad because there might be an issue with the ability for workers to come out of the market, for more people to work. If we have a declining population or not as fast an increase, remember, people are making less kids nowadays. That's going to have an effect down the road on our economy. I don't necessarily believe it's all bad. A lot of people do believe it's bad, but the earth only has a limited number of resources that we have to split up. So maybe it's okay for that population to be more stagnant or declining. But I truly believe that Fed Chairman Powell has the good of the U.S. people as a whole in his mind. He got bullied before by a previous president, who I shall not name, but who has orange skin. And right now, I got a good chuckle out of people here for that one. Guys, let's not criticize him. He's got a tough job. Keeping inflation, let's put it this way. He was right. Raising rates, he was right. It really tackled inflation. Inflation was skyrocketing. He said, jack these rates up. And it absolutely put inflation at bay. And guess what? We're still seeing economic growth. Is it possible this still soft landing they talk about? I don't know. Has there been a recession we just haven't acknowledged yet? Remember, the inverted yield curve still exists. That's when the 2-year and the 10-year treasury the 2-year is above the 10-year. Usually it's the other way around. Why? Because as you have debt longer, you should get paid more for it. But if the 2-year, which is shorter term, is higher than the 10-year yield, it means people see a short-term issue more than a long-term issue. And that's in the last 7 or 8 times it's led to recession. But we haven't declared a recession yet. Who knows what's happening with that? But we inverted back in July of 2022. We're coming up to 2 years here soon when the inversion started, which would be one of the longest it's ever happened. Now, guys, behind me, busy week for earnings. Look at all these companies' earnings. A lot of retail. Dick's Sporting Goods, Dollar General, Dollar Tree, Kohl's, Ulta Beauty, Williams-Sonoma. Those are some of the big earnings coming out when it comes to retail. Don't be afraid of declining same-store sales on some of these because we're still coming off the big runs from COVID. Even though it's 4 years ago, the recovery has been the last 2.5 or 3 years. So don't be afraid of those. Make sure you look at how are they opening or closing stores? How are they doing on being more efficient as an operator? That's very, very important, especially with Dick's and Kohl's. Ulta Beauty is a company I've loved for a long time. They do a great job of buying back shares, and they have a great return on invested capital, but their stock has skyrocketed. So I'm going to be interested to see what happens this week. Hopefully there's volatility. You know what I'm hoping for? A big miss. That way the stock falls. Two other companies, Oracle, software provider, struggled in terms of, they don't have the same balance sheet other software providers have, not like Microsoft, et cetera. They haven't skyrocketed as much as Microsoft has, but they do a lot with businesses. So it'll be a good indication of what they see in the business landscape for growth in the future. So that'll be important for Oracle on how they see their business sales going. And finally, Zim. Guys, I love talking about Zim because Zim is a shipping company, and shipping business. And when their stock was skyrocketing because shipping costs were so high, we sat there and said, be cautious. There's a lot of demand for goods, limited supply. We used to ship a container from China for between $4,000 and $5,000. And during the peak, we were paying $20,000 to $25,000. It skyrocketed 4 and 5 times in a matter of 1 year because of demand. Now that's coming down. They made a profit. They made a loss last year when they were previously going to have a profit. It's a lot of fluctuations going on. So guys, here on this, I want you to remember that you're not supposed to look at these earnings results and make an immediate decision. What you need to do is say, these are short-term results. Companies are going to beat, companies are going to miss. The question is, are you paying a reasonable price for the company? If you are, and the stock falls, they miss, it's an opportunity for you. Just remember that. Don't make any hasty decisions just because of earnings. If the thesis changes, reevaluate. If the thesis hasn't changed and the stock has fallen, be very happy you get to buy a great company at a great price. Now, guys, NVIDIA keeps soaring. Some companies have come out there. Cantor Fitzgerald increased its price target to $1,200 a share. It's exciting. I hope you don't feel FOMO. If you do, completely understood. I used to have FOMO. Now I have much less FOMO. Remember, every investment is the present value of all future cash flow. If you're seeing the stock skyrocket and want to understand, is it the right company for you? That's what we're here for. That's what we're here to talk about. If your fundamental belief is that if you pay a reasonable price for a company, as its earnings and profit increase, so the stock price, we're the channel for you. And you're thinking the right way. That's the way you need to think. The hard part is seeing something go up 3, 4, 5x times in 1 to 2 years. It's tough to not have FOMO there, fear of missing out. I don't blame you. I used to have the exact same thing. Now, the great thing about our community is people in there talk to each other and we kind of laugh about these things. Just like when a stock falls, you're going to feel regret. Oh my God, I missed something. But if you buy for the right reasons with the right process, it will become an opportunity for you. Wouldn't you just love to change your framework from this stock has fallen, oh my God, to this stock has fallen, this is awesome? From the framework of, well, that stock is up 5 times, I need to get on it, to that stock's up 5 times. Should it be up 5 times? Why is it up 5 times? What does that mean about the future? Asking those questions will make you a better investor, which will lead to better financial results. We used to talk about FANG. And it was the Magnificent 7. Now it's become the Magnificent 1, essentially, right? Guys, nothing stays popular forever. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. I just encourage caution in this. Have I been wrong on things? Absolutely. Will I continue to be wrong? Absolutely. But when we saw those junk EV companies and the tattooed chefs and all those junk companies during the 2021 surge in the market, we sat there and said, be careful here. And the vast majority have fallen a ton. Now, keep in mind, guys, the market isn't up a lot over the last 2.5, 3 years. We've just seen a big resurgence. If you look at the NASDAQ, it's currently at 16,051. Basically, it's all-time high from 2.5 years ago. Same with the S&P's up more. But still, guys, you would think that the markets were up 30% for how things are going. Yeah, they're up 30% lately, 40% lately. But over the last 2.5, 3 years, there's nowhere. Look at Tesla. We warned about Tesla, and Tesla's still crushed since I've started warning about them. Don't get me wrong. But the company is better today, and its stock price is down well over 50, 60% since its all-time high. These are the things I'm trying to teach on this channel, the process I'm trying to teach. Not to tell you, go buy this stock. This is how you need to think about investing. That's what I want to do here. So again, guys, if you want to learn more about the 30 companies I want to own at the right price, watch our next video on the 30 companies. Take care.